Hi, this is Mark with Right Line Trading. This is our evening newsletter starting with this disclaimer that all signals and trading opportunities that we provide are for educational demonstration purposes only. Everyone should understand that trading involves substantial risk and that a person can lose a substantial amount of money. Always carefully consider your financial position prior to trading and never risk more than you can afford to lose. Now, right now, we really are in perilous times. We're looking at the fact that the Fed, with interest rates at 7.6%, may be forced to hit us with a series of interest rate hikes. There's a question during the March Fed meeting, which I believe is March 16th and 17th, whether or not they're going to raise interest rates by 50 basis points rather than 25. So we are in an inflationary period. We're trading tech, and many of the other stocks are extremely risky. What we have to do is move up to a much more defensive posture and look at stocks or ETFs that can provide us with great money in an inflationary environment. And one of those is the Invesco Multi-Sector Commodities and Agricultural ETF. We entered it right here. It is a perfect entry. Everything below us is green. It's telling us that money flow is rocking to the upside. Our C2 is a measure of volatility. And we're really in a nice position to take this long. Now, there's a lot of reasons why the Invesco DB Agricultural Fund is likely to go higher. Now, Russia is on the verge of invading Ukraine. You can never tell if that invasion will actually take place. But it looks very likely like it will. Now, if it does, the market is going to take an unbelievable shellacking for a few days. And if we keep our powder dry, we're going to be able to get a lot of great stocks at a discount. This particular ETF should rise. The Ukraine is a major wheat producer. And if that wheat production is disrupted by the Russian invasion, which obviously it would be, it's going to increase the price of wheat. The soybean harvest in Brazil was very, very disappointing. And soybean demand for biofuels is up. Also, natural gas prices in Europe are at record highs. And natural gas is a major component of fertilizer. Fertilizer prices are now 3 times pre-pandemic levels, and many farmers can't even get a hold of it. So if they have to pay more for fertilizer, they're going to pass that price on to you through higher commodities. China has put a ban on the export of phosphates, which is a key component of fertilizer. We've got supply chain issues, and as far as I'm concerned, the agricultural boom is really just taking place. Now, this ETF has moved up considerably from really off of an all-time low, but it's got a long way to go to the upside. The more havoc, unfortunately, and geopolitical upheaval that takes place, the more inflation that takes place, is going to drive this higher. Now, this ETF owns a basket of commodities: soybeans, wheat, corn, many others. I think it also holds some bonds and some other securities, but really it rises or falls on the price of a laundry list of agricultural positions. And I believe that they are headed higher. This is a terrific position to hold, I think, out 6 months. You could buy it. It's at $21.01. Or you can buy a long-term call position on it. Not expensive. Very low volatility, low cost. and it can wind up making you a significant amount of money. I would look very carefully at David Boy Apple, which is the Invesco DB multi-shares commodity and agricultural ETF. Everyone have a wonderful evening. I look forward to talking with you tomorrow.